US markets bust through to new highs as ASX compresses into tighter ranges. Taking the next layer down, we're going to be looking at the best trading opportunities in the Aussie market. And to give us a bit of feedback this week, we're asking you to comment below to let us know which part of this weekly report helps you the most. And the person we have to thank for this weekly report is Gary Glover. Good morning, Gary. How are you?
I'm pretty good, Chris. Yourself?
I'm all right. I'm wondering which parts of your report people find most useful. I'm sure it's your technical analysis, but that's just my insight, so we'll find out. As you're going through and you're writing this week's report, obviously you noted that there's a decent move happening in the US market. So how do you see that moving and the massive disconnect we're getting in the Aussie? You're looking at the indices. What are you seeing right now?
Yeah, look, I thought we might get a little pause, a little consolidation in that NASDAQ there. Just the last couple of weeks there, it had finished off its highs. But, it's been so strong here, Chris. It's just powered on here. So, if anything, it looks like it's accelerating upwards there. So, a couple of levels to sort of watch here. The, I think the 138 expansion and maybe the 150. I mean, So it's funny, each index sort of has got its own little favourites there. I actually don't know what the favourite is for the NASDAQ, but I know that the XJO, like we're at 50%. So we love to expand and pull back. So we'll pull back to the 50%. We'll expand 50% for its ranges. That's the big one for us. The S&P 500 loves to expand to the 161.8. So there's so many cases in history there with that market. But a bit more. Probably stronger, I guess. So they will basically expand to the 161.8. So that's the level that it often goes for, So, but yeah, so the NASDAQ there, I'm not sure that actually, it's, you think actually with it being one of the stronger indices, it's going to probably go for one of the larger ones. So, but yeah, it looks pretty robust there. I mean, he's looking at this, I just can't, it looks like it's accelerating, Chris. So, yeah, I was trying to find maybe, some sort of history there, oftentimes we talk about sort of cycles, with the smaller cycles are sort of those sort of 3 months or 90 days, but oftentimes they can go half year or full year. And in the past, sometimes you can see that, sort of year on year on year. So obviously we're seeing like a lot of October lows. But yeah, we're probably just going to keep an eye out for some of the other ones. Yeah. So I don't know if there was there might have been an August high there recently. So whether we get another August high or not, but so I think we might have another August high in there as well. Sort of previously in 22 as well, might have been an August high as well. So just go back and look at some of those dates and just see whether we get any timing possible for a pullback in here. But this stage it looks pretty firm here. It's pretty aggressive there. So yeah. So I would definitely not be trying to short this market there. I see the great Martis out there every week saying, that the sell-off's coming here, but unfortunately, this thing's about 30-40%. The whole time he's been calling for this bubble to burst here. So anyone following that advice there, it's probably been KO'd already. So you don't fight the tape here. That's the reality is that's a pretty strong sort of bullish move here. Stays pretty firm here. As I say, just get us the momentum is is on the upside here. So even if you go back and look at those 40s and 70s when those inflationary periods, there's some of the moves are breathtaking in that period there. I think it might have been the 70s there. We had some, I think there might have been 3 rallies there where the equities rallied like 70% and then pulled back 40%. I think it was on 3 occurrences of that or something like that. So so just got to put that in perspective. Can really sort of markets can really sort of fuel on high here. So yeah.
Well, you've talked about the NASDAQ and that accelerating trend and getting quite fast. You did just touch on the S&P. We'll just bring that to attention now because you were talking about the 161.8. So just to clarify for those who are looking and understanding the Fibonacci ranges, you're referring to the high that we had late 2021 or 2022, actually early 2022, and then coming down to that October low. That's the range that you're talking about. And then what is it that you talk about, the expansion? Is it how high it breaks beyond the previous high?
Yeah, so how much comes out of the range there? So you're often looking for some evidence inside there. So you can see here that the actual market pulled back onto the 50 in October 23. And then, so that becomes a bit of a level to keep an eye on, because obviously it's the 50% retracement was important in the market. Then maybe the 50% expansion will be important, So that was looking that way the last couple of weeks there. I think you might get a little bit of resistance there, but gone straight through that level there. And we are, not that it's saying that trend line is that important there, but just sort of something sort of highlighting the strength of this move here, And even sort of like, looking at drawing a little ascending wedge there, it's getting pretty reasonably aggressive here. So, yeah, but, the thing is, they can climb along these things for quite a while here, Chris, as well. So, but I think, that 5-6 sort of like 3-6 or something like 5-6-3-5 there, it's probably definitely a level to sort of keep an eye on. Just because it does have some history of expanding at those sort of levels there. So, but yeah, it does look okay there.
Okay, so there's levels to look at on the S&P 500. If we're ready to change gears and, well, depending on how you're trading the market, quite possibly getting disappointed, the ranges are just quite something different on the Aussie market. It's almost like it's contracting in a way. It's just getting smaller and tighter. You've drawn in sort of these lines, which is a bit of a wedge.
Yeah, so I've had a little shakedown there yesterday, and now we've gone back up to retest the top edge here today. So whole thing is tightening. And so it's, sort of just going to wait for the break here. I mean, like normally they move in favour of how they, how they've moved into this consolidation is usually the odds favour of, a break out the same direction. So that does favour an upside break here, but doesn't guarantee us an upside break here. So, but with that momentum, the other markets there, definitely looking sort of ominous there. But we definitely got a breakout there. I'd probably like to sort of see that that recent sort of high broken there, at least sort of break one of those highs. Breaking sort of a second high would be pretty, pretty compelling there. But I get the feeling, Chris, if it does break above here, I think it might just take off. So hard to say here. I mean, I know some things are pretty extended here, but we know that extended markets, we study this every Friday, because extended markets can get more extended, remain extended, and keep being extended for longer periods than everyone thinks. So that's the name of the game of some of the strongest stocks here. So pretty interesting.
Right. Well, so moving from the Aussie market into the next layer down of the shares that you're looking at from a trading perspective. Now, Clinuvel, that is one where we looked at that many times throughout those Friday reports you're talking about, where it's just a consistent, huge momentum. But it's been a different story since, late part of 2021, come down short out of bottom. Did hit momentum once again throughout that stretch, but this is a bit of a drawn-out movement here. Can you just walk us through the tide at the far end, the right side of the chart? You've got FB0123. Is that false break and maybe a 0123 bottom?
Yeah, it's got a few things going on here, Chris. So we've basically gone back to retest the old low there from 22 low, and gone back just marginally lower there. So we've got a bit of a false break on that sort of wicket there. So I think we're seeing a few, HM Milk sort of one that's recent. I think Ramsey's had a couple of sort of retests of the high, and I think ASX as well. I think ASX did bounce there. Ramsey had a bit of a bounce and then came back and retested again, so it didn't really get going here. But oftentimes just sort of go back and retest these lows. That's sort of where you can reverse and get going from. Hasn't really got going here, but we definitely have seen elevated volumes at those sort of lows there. So potential sort of accumulation taking place here. But if they don't get going there, you do want to sort of see that basing type of behaviour there. So, you get your low, then you get first high low, second high low, so that, third high low. So we did see that 0123 pattern there, which is a nice sort of basing, sort of pattern there. So did have some good news there last week, and the stock did sort of fire up here. So it looked pretty bullish to me. Has retreated here the last couple of days. It is a hard stock to position it. It's not the highest liquid stock. It definitely gets pushed around a bit there. So I don't know if there's a little bit of gains going on in the last few days here, but I think this is sort of I know Wilson's put a report out there maybe just over a week ago now, maybe a bit longer there, just with a $31 valuation. I thought was pretty. I think most of the brokers are sitting around 22, 23 or something. But yeah, they had their basis for the $31, which is an interesting report there. But talking about the call option on top is to do with the like, you know, like Sinisi's basically got the it's a sort of cream there for people with pigmentations there. It's obviously helps with that with the pigmentations there. But there's a sort of side benefits of that is that there is some UV protection in that cream as well. And the call option here is that it could be seen as people with much sort of fairer skin as well. It is showing greater protection than existing products there. So definitely got like I think Wilson's there was sort of we're projecting the earnings to I think sort of triple out to 27 there with the products they've got and the stuff sort of coming online here. So it's a pretty good growth there moving forward there. But the call option there is that there is a potentially sort of game changer there with that with this sort of UV protection as well there. And it's potential the potential applications are that maybe that can be used and all if you're getting it's the most fairest people are getting an extra protection from the sun and also helping the DNA recover faster, then that's got pretty big implications there just from sun cream and a lot of creams in general there. So I think I can't remember the company now, but there's the one that had the zinc. They had the sort of zinc that sort of originally sort of went into some of these creams there. That was seen as a boost at the time there, and they had quite a large sort of jump on the back of that. And then that product there was sort of was started to was added into a lot of other products as well. So can be a bit of a game changer there. So when I read that, I thought it was actually a bit of a game changer type of news there. In the past, we've seen those game changer sort of stocks have that big jump, run up, and then rolling not look back. But this is a jump right up here, and it's got sold off like a really aggressive move on the first day. It might have been last Friday or something. And then Monday, Tuesday here, we've had a pretty aggressive sell down stock here. So just interesting there. Just it's a very difficult stock to actually buy and get set in. You see that only a few hundred shares I think there. So I don't know if there's a little bit of gamesmanship trying to push it back in here or not. But I thought the report was pretty good. I thought the update was excellent. But someone's sold into that rally there, so that's does get a little bit of caution there. But definitely want to keep an eye on here. I think if it sort of starts to build here and recovers here again, I think it's sort of one potentially sort of follow that. We've seen some of these biotechs with a good run line really sort of do well over the years. And things like PME have really had that's had an awesome run as well, Chris. There, so
it can happen if the market gets behind it. The news is there, the information's there, the institutions push it. It can become a very good trading share. So
it's just been lightly traded that CUV. It's just sort of I think it's pretty tightly held. So it just means there's not that liquid again, so it can get pushed around a bit. So pushed around in a good way and pushed around in the bad way. So if you're trading it there, probably trade smaller with wider stops. That's probably the way to go. Yeah, and then maybe sort of one of those things that you might sort of build into the position as it grows as well. But it's you come in too hard there and you get whacked there pretty quickly on it. But probably building into it sort of slowly is a good way to look at it.
Well, one that you don't necessarily need to build in and have the same finesse for getting the trade set is Sonic Healthcare, much larger capitalized company and a lot more trading each day. But I'm seeing here on the chart, you've got sort of maybe some accumulation highlighted down here, a bit of a range and bouncing off its lows. And then you've got two sort of stops on the way to retesting the high. What's the significance of putting these on the chart and how do you see that unfolding?
Yeah, so look, I do look at the sort of fibs and stuff. Just obviously some of the bigger, history sort of shown over time here. Some of these bigger stocks, they do retrace back to the, the 38 and the 50 and the 61. But those sort of Fibonacci levels do have a lot of relevance there. But you can't just sort of buy them just as they hit those levels. You want to sort of see some sort of price action, some support there. So I noticed with that sort of Sonic there, we saw a retest of that level. We saw a first high low, second high low. So the price started to tighten up, and then, I looked for a little B wave break on that tightening up there. So that's what I've used to sort of enter there, and I just wanted to see some signs of support there, which was seen so far. We've had a nice rally here out of that level, and now a nice little consolidation. And the volume sort of dropped off on this consolidation, so that's kind of constructive as well. So seeing those big volumes at the low is sort of signs of accumulation. So it does look like it can build here, but because we've had so much relevance at all the fib levels, we've got to watch these moving forward as well. So that's why I'm sort of saying 28.15 to 50%. We've bounced off there a few times, and then 32.50 is the next level. We've bounced off there plenty of times as well. I mean, a 32.50 has been a high, it's been a low a few times as well. So heaps of relevance there. So just these are sort of technical levels to be sort of monitoring for. But I think it looks pretty constructive here. I think some of those healthcare names have been on the mend here.
Okay, well, another one that's definitely not in healthcare, Santos. It's got a lot of headlines in the last week or so. You've been looking at it from this congestion perspective. So you saw it sort of had a bit of a rally from a higher low, came up, stayed within this range that it's had under the previous highs, just surpassing that high, but then having a bit of congestion, as you said, in time. And from a relative strength perspective, you did note in the last couple of weeks that Santos has had stronger relative strength. What's happened now, and what does that do to your outlook for Santos?
Yeah, look, I still think, I mean, this stock has been one of the, on that relative strength sort of concept there, it just hasn't sold off there. That 10, 11 weeks, the stock held up so well versus the rest of the market there. So if you look at all the other material stocks, they've all had a fairly deep correction and come back probably a bit more impulsively rather than corrected there. Whereas Santos has really gone sideways for 10, 11 weeks while everything else has come back. So as much as I love Woods, I got a big position in there. Santos is the one that's held up strongest there. So it's in the strongest position there. So, so I think this is the strongest looking name in that energy sector. And, we know with high inflation periods in the past, Chris, that, energy's been a pretty buoyant sector. Precious metals been pretty buoyant, and also value. So, I think there's still pretty good sectors to be looking at there. And I just think that was a nice little jump there. So, if we break out to the upside of that range, that sort of projects up to about 940 here. So oftentimes where there's smoke, it's buying, so I think, there's potentially a sort of couple of companies sniffing around here. So I wouldn't rely on that personally there, but I think the oil price has recovered. The share price has just held up really strongly here. So, I think this still looks pretty firm here. So, I think it still looks pretty strong.
Nice. Well, the next one in your report, we're going from energy down into gold. So RMS, Ramelius Resources, looking at this, it just seems like the bullish spacing is the first thing that catches my eye that you've highlighted here. So why is that important for something like Ramelius?
Well, again, it's just sort of probably, with that gold sector there, it's a real mix there. If you go through, because I sort of noticed that the spot gold had been, it made a high, made a first lower high, second lower high, and it was rallying up here recently. I thought, well, don't want to see a third lower high and roll off there. That would be a bit negative for gold. Then I think on Friday night, actually it rallied up and broke above that second lower high. So that kind of negates that pattern there, which is kind of constructive there for gold as well. So it's like, okay, that's a pretty positive sign for spot gold generally, just because it's gone through a consolidation now, starting to head back up here. But you look through the gold names there, it's a real mixed bag. I mean, some of them have had pretty deep, impulsive sort of sell-off. Some of them have had sort of more corrective sort of pullbacks there. So, this is one of the names there that probably looks the strongest to me. It actually sort of held up, come back in a bit of a corrective manner, bit of a sort of descending wedge. The whole thing sort of sat on top of the previous high as well, so it hasn't overlapped there. It just looks like it's actually starting to sort of break out of that little wedge there as well. So, although this trend's been running for quite a while here, it's still in a pretty strong position overall. Just stock hasn't sort of struggled to go down here. So showing much more strength in the stocks here. So, it's sort of one that I've just sort of added to there yesterday, and I think it's in a pretty strong position here.
Well, sticking with the gold side of things, RRL. So you've said you think Ramelius is possibly the strongest gold stock. RRL still in your report. well, you did say there was a mixed bag with what's happening with the gold stocks.
Yeah.
What's happening here and why has this caught your eye today?
So I think, so I looked at sort of the greys previously. That was sort of, it's already had a bit of a bounce there. I think Evolution's had a bit of a small bounce. Northern Star's still going down on its knees a bit here. So it's just, they're all over the place, really. But I like Regis there, just because it's sort of come back down to retest the bottom of the range there. And just, it has been a bit of a sort of sideways orientation here so far. So sort of marginal new high there now, marginal new low. So, oftentimes there, sort of, if we get a bit of a false break of this range here and some volume comes in, just a sort of good level there. So from a, has sort of been a bit square here in its sort of trading there. But, I guess I like the fact that, if you're sort of buying down the bottom of the range there, a little false break here, then you've got a pretty tight stop with a, potentially going back up to retest that high. So, probably target up towards sort of 240-ish. So pretty good risk-reward outcome. So do need to see a bit more from it here, but definitely one that looks probably a bit more constructive for me in terms of the golds there, where just, like a lot of them are just really, I look for the holistic and they just, unlike some of the other sort of sectors which look very similar, gold looks very, very disjointed there. So, I mean, look, obviously some of them are sort of a lower cost producer, some of them are a bit higher cost. So, seeing obviously different levels of performance there, but I can't remember seeing them speak so far apart in performance and how they trade there. Sort of, they're normally sort of trade very similar to the rest of the sector, but quite disjointed at the moment.
Well, disjointed gold miners going to technology companies. We've got Xero. So you've talked about them before, sort of transitioning to sort of more profitability. Now that can impact it. But what's really catching me here is this weekly chart. You've got, it's a bit hard to see with the orange, cup and handle there. And you've got some Fibonacci numbers. So what's the most critical part that's on the Xero chart for you?
Yeah, I mean, like, again, it's just sort of showing strength there, Chris, as well. Just sort of, it's, it's been a few little disappointments in here as well. So it's had a few little knockbacks there, but it just keeps bouncing back every time. So it isn't that sort of, it's that sort of stage of the company where, it's been all about revenue previously, but now it's sort of about about earnings as well. So we've moved sort of out of the revenue stage into the earnings stage. So basically sort of starting to make profit and getting past the break-even level. So this is sort of when, the company is growing fast. There's no doubt about the revenue growth. But, if that sort of starts to kick into earnings here, it can be quite significant. And we've seen in the past there when sort of stocks do transition from the revenue model into sort of the earnings and profitability model there, that's when the sort of share price can move quite a bit here. So even though it's had a pretty good run here, still got a lot of growth ahead there. It just looks like a little cup and handle there on the sort of on the weekly and the daily sort of setup, and being pretty resilient so far there. So you might get a little consolidate. I mean, I guess the ideal setup would be a little consolidation here, sideways here for a week or two, and then push on through that. I think you would push on through that top there. I think you're more than likely to go back and retest the high there, which is up around that sort of 156 to 158 sort of zone there. So overall, it's just not showing too much weakness at all.
Well, that's always a good thing if you want to market leader, something that's not showing much weakness. To round out the report, the last one is ZIP, ZIP. So, well, technology in a way, but very different change of, well, what's been happening for the last couple of years. The weekly chart really shows. But you've had a sort of an about face of this group and what you've been looking at from it and what you've been seeing in the chart. So what's your taking on this?
Yes, I mean, it's around that sort of leadership as well, Chris. We sort of know like that, yesterday's leaders won't be the future leaders. So, a bit like, Tesla was the leader in the last bull market. So it's not going to be the leader in the next bull market, and that's obviously been NVIDIA. So NVIDIA has been the leader in this bull market. It's not going to be the leader in the next bull market. That's what history sort of tells us there. So we saw that sort of buy now, pay later. That really drove the Aussie market back years ago. But we know that those become leaders at that time they won't be leaders in the future. And that's been the case here. The sector's been underwater there. So it's been a smart thing not to be involved in that sort of sector there. But it is sort of starting to emerge here. Some of the names in the US as well starting to emerge. Obviously, Square's been a bit up and down. They had a few good runs in there. But I saw, I think PayPal's emerging in the US as well. But I mean, the Zip is really interesting there. It sort of has moved into the US. They had a bit of growth sort of coming through there. So yeah, bit of a positive move for them. The big thing there is that just on the chart there, look at the volume is massive. Looks like big accumulation's been taking place here for quite a while here. So it's just starting to break through the top here. So that's pretty constructive. It had a bit of a pullback under that old high, and then it's just bounced really aggressively straight back up to the high again. So we know sort of when they, if your stocks struggle to go down, and then they bounce back straight, really quickly there. It's just a pretty buoyant sort of sign here. So, it's interesting here. It's obviously gone to a 52-week high, so that's pretty positive there. Just looks pretty strong here. So there is a lot of overhead, Chris. That's the negative for the stock here. You're going to be fighting against people that have bought it back in 21, 22 at higher prices. So might keep a bit of a lid on some of the movement, but technically nothing wrong with this chart here at all. So it does have some momentum here at the moment as well. So just might surprise a few people here. Has surprised me so far.
That's the great thing about trading and your approach to it is that you're consistently coming back and reviewing and assessing what the market's actually throwing up to you and what you're learning from it and just showing, well, this is relative strength. This is a market leader. While history says that it's going to have some headwinds, the charts and the prices are showing otherwise. So to that point, you're talking about momentum leaders. We'll put on screen to the right-hand side where we see the whole playlist that you cover on a Friday or a weekly basis on Fridays. You're looking at the top momentum companies and the launchpad companies. And we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.